Wall Street summer blockbuster is heading for a thrilling fall sequel. The action around AMC heating up again. And you've got a front row ticket to the action. Two men with very different takes on where this stock is headed. Matt Kohrs has some real skin in the game. He's long shares of AMC. He says it's heading higher from here. He, of course, is known as an ape. We're going to hear from him in just moments. But first, let's get to Chad Beynon. He covers AMC at Macquarie Research. Just downgraded the stock to underperform yesterday with a $6 price target. Chad, welcome to the show.
Thanks, Melissa. Appreciate it.
A big part of your note was highlighting sort of the obligations that AMC still has, even despite all its capital raises. Rent is one of them. How big of this issue is it for AMC, and how critical was that in you finally downgrading the stock to an underperform?
Sure. Yeah. I mean, look, for starters, for the past couple of years, we've been bulls on the space. We've been real believers that the streaming and the PVOD won't disrupt this industry. However, what we've seen in the data in the past couple of weeks just tell us that the margins will be impaired fundamentally for these companies going forward. I think it's very difficult for them to get back to the margins that they had in 2019. So to your point, when we look at some of the obligations that companies that we cover have to pay in 2022 and 2023, it was just hard for us to continue to support AMC. We do have a 12 to 18 month target, but yes, it's the obligations that were the crux of our downgrade, and we're projecting them to generate zero free cash flow in 2022. We think they'll generate about 50 cents in 2023, but zero in 2022.
And the data that you're citing that has rolled in the past couple of weeks or so, that's all box office data, because we knew, I would imagine that we knew what the rent obligations were pretty much for the year well before a few weeks ago.
Yeah, it's the revenue picture. So for the third quarter, we're projecting down 50%. That gets to down 35 in the fourth quarter. But then the big thing for next year, we're projecting down 15% versus pre-pandemic. Prior to this, prior to our downgrade, we're looking closer to levels getting back to pre-pandemic from an admission revenue standpoint.
I respect that this is a fundamental analysis, Chad. That's what you do for a living. You have a model and you got to go with the numbers. But at the same time, do you acknowledge that the stock, even though your model may point to it, may never get to 6, may not actually be an underperform in your universe simply because of the other dynamics going on?
Yeah, absolutely. And, we've been looking at some of the other meme stocks, some of the other options that people could go into. I understand that the technical setup right now is pretty positive, and there's been a lot of people talking about that. Also, with people going back to work post Labor Day, with sports betting coming out, there's going to be a lot more things that some of these retail day traders can look to do other than support AMC on a daily basis. And I think just the overall options for them could also hurt the story going forward from a meme momentum standpoint.
So you're saying that meme investors may shift their focus to other meme sort of stories away from AMC. So even that part of the story could go away. Okay, Chad, great to see you. Thank you so much for joining us.
Thanks, Melissa.
Chad Beynon. Now let's get to the other side and bring in one of the biggest apes in this trade. Matt Kohrs has been trading the stock since the first big breakout. He joins us now. Matt, I know that you guys, and when I say you guys, I mean the Army of the Apes, have said repeatedly that it's not a fundamental story. Is there any point at which you say the box office is simply not there and the stock won't go anywhere? It may not go all the way down to 6, but it may not go much farther than 44.
Yeah, so I wouldn't agree with that, just because of, for many people, the millions of people who this particular story resonated with, the box office was not the reason why they got in. So I don't know why the box office would be the reason that they get out. I was looking at Chad, and I respect a lot of what he said. And right there, even a little thing I want to point out of kind of his commentary was more of, right now, it's a technical setup. Many of the quote unquote apes in this particular play, they're in it for a swing momentum play to see if there's some sort of advantage of a short squeeze and the chance to make money on a pretty decent trade. So the box office, obviously, I hope that it comes back. I hope it's stronger than ever. But right now, that is part of the fundamental breakdown that not many of the people who are in the current trade are really focusing on at all.
What's your current technical take on where the stock is trading right now?
I'm extremely bullish, apish on where the technicals are at. Honestly, from We have July all the way up until August. We're seeing a very bullish follow through. We're just seeing a beautiful cup and handle for all my technicians out there. And we're looking for that to kind of test in the 46 to 48 area and see if we could get a breakout. And once we get back into the 50s, we know just for the average duration of these shares that are out on loan, we have a lot of those people who all of a sudden they're going to start being underwater on the short position. And to me, that's where things get very, very interesting to see if there's some sort of pressure on them to start cutting before they really go underwater. And you never know, we could see an explosion like we saw in early June.
Hey, Matt, it's BK. So, I'm looking at the technicals. Yeah, it looks like it wants to break above 50. So let's talk about the other side. Let's say it breaks out, starts to run, you get the short squeeze. When do people get out of it then? Because we all know it's easy to make money, but it's hard to keep it.
Yeah, I definitely agree with that part. And here, that's where I think a lot of people have different opinions on where they do or don't. And to everyone out there, obviously, I'm not a financial advisor. I implore everyone to come up with their own trading plan. For me, though, in this scenario, I'll be using some of the various data sources to track what's actually going on with the shorts. And personally, for me, I'm looking for something as simple as following the trend and looking for the shorts to cover, not necessarily a price target. And I'm not saying that's a good or bad plan. I'm just saying that's my personal plan.
Matt, great to check in with you. Thanks.
Thank you.
Matt Kors. Guy, you got to feel for some of these analysts out there who still have to, day in, day out, go with their research report that has a fundamental analysis when there are so many other factors at play in this story.
There are a lot of factors at play. I mean, the short squeeze, I mean, I understand, but, it's interesting. The stock average, recently, stock average is about 140 million shares traded a day. So if you're short the stock, you have ample opportunity to get out on a daily, if not hourly basis. So, I understand, I get it. People are short, they're going to have to cover. But basically, on any given day, those shorts can cover in spades. So I'm not quite sure that holds as much water as the folks want to think. With that said, could it go higher? Absolutely. I mean, we live in a different world right now where, as you said when we started this, fundamentals really don't matter. So I'm not certain why they're going to start mattering now.
We've got an after-hours alert here on Beyond Meat that we're watching for. Shares are down after the company disclosed its COO left the company just last week. The stock is now down by just under 1% at this point, but it follows a string of C-suite departures over the past year or so. Dan, where do you stand on a Beyond?
Yeah, I think the way this came out, I guess the CFO left abruptly. It was announced days later. And like you said, Mel, I mean, this is a company that's had a hard time holding on to some senior executives. I mean, trading at, 14 times sales, that sort of thing. It's just not that compelling for a company that loses a lot of money and they're not expected to be profitable for at least a couple of years. A lot of competition out there. And I mean, isn't the jury still out whether it's actually a good product or not? So to me, this one doesn't interest me at all.